unbiased reveal channel.
I'm Jenny.
And I'm Peter.
Welcome back. Today, we're diving deep into the crypto news cycle, and wow, it is quite something. You've got the market basically holding its breath, completely fixated on the Federal Reserve's next announcement, Bitcoin, just sort of treading water around $114,000.
But, and this is the fascinating part, while that macro picture feels kind of frozen, the institutions, they're having an absolute party in the altcoin space. Seriously.
Yeah, we're seeing these huge institutional thumbs-ups for assets like Solana and Hedera. Plus, there are massive shifts happening with real-world asset tokenization. It's moving fast.
Right. And then on the flip side, you've got these lengthening shadows, regulatory, political, we're talking bridging apps potentially used for shady stuff, right up to political funding questions hitting major crypto firms.
It's definitely chaotic. But if you want the signal through the noise, well, you're in the right place.
Exactly. We're here to cut through it for you. And hey, just a reminder, we've got the best referral link down in the description for you. Check it out.
Okay, let's dig into this October situation first. I mean, October, historically, it's supposed to be this, super bullish month for Bitcoin. Green 10 out of the last 12 years. Yet here we are, end of the month, and BTC is barely positive. Like, just hanging on above that $114,200 mark. It feels like we're holding on by a thread.
Yeah, the caution is almost, you can feel it, right? Everyone knows the FOMC meeting is next week, October 28th, 29th, and the market's already priced in, a 97.8% chance of a 25 basis point rate cut?
Almost a certainty.
Exactly. So if that cut is basically baked in, why are we seeing this total lack of, aggressive buying? Why isn't the market popping champagne corks already?
So what gives? If we know the cut's coming, why the hesitation? Is it more about what the Fed says this time, not just what they do?
Bingo. That's what analysts are pointing to. The real aha moment here isn't the rate cut itself that's like yesterday's news. It's any signal about ending quantitative tightening, QT.
Right, QT. That's the Fed shrinking its balance sheet, pulling money out of the system.
Precisely. So if they hint they're stopping QT, it signals they're okay with a bit more inflation down the road. And historically, that specific pivot, it's like rocket fuel for risk assets. Bitcoin loves that stuff.
Ah, okay. So maybe we should say the end of QT is the real crypto printing press, not the rate cut.
I think that frames it perfectly. It's not about relief. It's about getting the green light to really, take on more risk again.
Well, crypto waits for that green light. Something else is just sucking all the oxygen out of the room, capital-wise.
Okay.
And its name is Nvidia.
Oh, absolutely. The divergence is stark. You got BTC struggling, ETH, SOL down a couple of percent.
Yeah, below 113K for Bitcoin even.
And meanwhile, U.S. stocks, S&P 500, Nasdaq hitting new all-time highs, driven mostly by that AI frenzy.
That's the conflict point, isn't it? It feels like crypto is the struggling indie band playing a tiny club gig, while Nvidia is the stadium-filling pop megastar heading towards a $4 trillion market cap just based on their CEO saying cool things. All that money seems to be getting siphoned straight out of crypto and into big tech.
And this whole situation, the waiting, the macro uncertainty, it breeds risk in the crypto market itself. We saw open interest, that measure of leverage.
Oh, yeah. What happened there?
It jumped from around $25 billion up to nearly $30 billion. That's a serious amount of leverage piling up.
Wow, $30 billion. That sounds like a classic double-edged sword, sitting right near these key price levels.
Totally. It means if we get good news, say break above 112K convincingly, that leverage could amplify the move upwards. But
if we drop below, say, $110,
yeah,
especially if the Fed disappoints,
then you've got massive liquidation risk. That leverage works both ways, and it could push the price down really fast. It's definitely a nervous setup right now.
Okay, let's shift gears. Where is the money actually flowing with some confidence? Institutional adoption. It feels like the altcoin ETF floodgates are genuinely opening.
It really does. And the message is clear. Institutions are looking past just Bitcoin and Ethereum now. It's immediate validation.
Like Bitwise launching their Solana staking ETF, BSOL, right on the NYSE. That's huge.
And their plan. Stake 100% of the SOL they hold, aiming for something like a 7% yield. It's basically the Ethereum ETF playbook, but for Solana. This really puts SOL on the map for the big players. The crypto Mount Rushmore, as some are saying.
And it wasn't just Solana. Hedera, HPR also got its ETF launch on the NYSE via Canary Capital.
And look how HBR reacted. Boom, up over 25%. Huge volume. It just shows institutions aren't just chasing the biggest names. They want regulated access to assets with utility.
Yeah, assets they can package up neatly for their clients, retail or institutional.
And the success of these ETFs, it sort of validates the underlying tech, right? Which might be why we're seeing these legacy giants almost leapfrogging traditional finance rails and jumping straight into tokenization, real-world assets, RWA.
Okay, now this gets really interesting. Western Union.
Yeah.
Like the Western Union.
Yeah.
They're partnering with Anchorage Digital to launch a US dollar payment token, USDPT, directly on, wait for it, Solana in 2026.
Mind-blowing, isn't it? Western Union, the company practically built on the old, slow correspondent banking system, is now saying, hey, let's put dollar payments on a fast blockchain like Solana. They want to cut international settlement times way down using this new Genius Act framework.
When Western Union decides blockchain is faster and cheaper, you know something fundamental is shifting.
And the plumbing for this tokenization is becoming mainstream, too. Look at Securitize. They're backed by BlackRock. They tokenize things like BlackRock's DUIDL fund.
Right.
Well, they're going public. Merging with a SPAC, $1.25 billion valuation, ticker SECZ, you'll soon be able to buy stock in the infrastructure that puts traditional assets onto blockchains. That's serious institutional embedding.
And it's not just financial stuff. Chainlink's involved in tokenizing, like actual property data.
Yeah, a huge amount, over $240 billion worth of government-sourced property data. Chainlink's tech is underpinning a platform called Balcony to bring that data on-chain, make it transparent, verifiable, think real estate records, but secured and accessible via blockchain.
Okay, so the institutions are building the on-ramps.
Yeah.
What about making the core crypto assets themselves more useful?
Great question. And there's progress there, too. Look at BOB, Build on Bitcoin. They've just unveiled something called a Bitcoin Vault liquidation engine.
Okay, what does that do? Sounds complex.
It's actually a really neat breakthrough. It lets you use native Bitcoin, not some wrapped version, the real deal, as collateral to borrow stablecoins.
So unlocking Bitcoin's value without selling it.
Exactly. Think about all that BTC just sitting there, dormant capital. This turns it into a super efficient financial tool. It even allows for partial liquidations, not just all or nothing, and cuts settlement times from days down to less than an hour. It's potentially unlocking trillions in previously stuck liquidity.
Turning dormant BTC into productive capital. I like that. What about Ethereum? Anything similar happening there?
Oh yeah, Ethereum's not sitting still. SharpLink is making a pretty big move, deploying $200 million of their ETH treasury onto Linea, which is a Consensys Layer 2 network.
Okay, $200 million is serious. Are they just staking it?
It's smarter than that. They're combining yields. They're getting standard staking rewards via Ether.fi, plus restaking rewards via EigenCloud AVSs, and crucially, it's all held under qualified custody with Anchorage Digital.
Wow, so they're stacking different yield strategies together, complex DeFi stuff, but within a regulated, custodied structure.
That's the key takeaway. It shows institutions are getting comfortable with sophisticated DeFi yield generation, as long as it's packaged within a framework they trust. That's a massive step for institutional DeFi maturing.
Okay, let's take a sharp turn now. From the shiny, regulated world of ETFs and RWAs to the Wild West. Compliance questions, regulatory shadows, maybe even a bit of comedy.
Definitely some eyebrow-raising stuff. The spotlight's hitting this bridging app called Garden pretty hard right now.
Bridging app, so moving assets between different blockchains.
Exactly. They just celebrated hitting $2 billion in total volume transferred. Big milestone. But almost immediately, online sleuths, people like ZachXBT, started digging.
But what did they find? Or what are they alleging?
They're alleging that maybe up to 25% of that $2 billion volume, so $500 million might be linked to criminal activity, money laundering, basically.
Wow, That's a huge claim. Hitting a major milestone, only to have people say a quarter of it might be illicit funds. That's quite the conflict point.
And the specific allegation gets even juicier. Investigators suspect North Korean hacking groups might be using Garden, especially after Garden reportedly raised its swap limit to 10 BTC per transaction.
Making it more attractive for moving larger, potentially illicit amounts.
That seems to be the theory. It's this weird dynamic where a platform's success metric, high volume, might also be an indicator of its appeal to bad actors.
And the sort of dark humor you mentioned.
It's that these online sleuths, basically armed with spreadsheets and public blockchain explorers, readily admit they probably can't stop it. Because the official enforcement agencies often move so slowly. It really makes you ask, Who is policing this decentralized space effectively?
Good question. Now, shifting from potentially illicit finance to high-profile political finance, there's this explosive story about the White House East Wing.
Yeah, the demolition project for a new ballroom there. Turns out part of the funding came from some very big names in crypto.
Like who?
We're talking Coinbase, Ripple, Tether, and even the Winklevoss twins from Gemini. Major industry players chipping in.
Okay. And the controversy.
Well, Democratic Senator Richard Blumenthal is now asking some pointed questions. He wants to know about the agreements behind these contributions, what was promised, what was expected.
So the scrutiny is about whether this looks like crypto buying influence or just participating in the political process like any other industry.
That seems to be the core tension. Most of the firms, Ripple, Tether, Gemini, have apparently been quiet. Coinbase put out a statement supporting the National Mall Trust, which is involved.
And the timing of this.
Yeah.
Didn't President Trump recently pardon the former Binance CEO, CZ?
He did, which just adds another layer, doesn't it? It underscores how politically sensitive every major move by these crypto giants has become. Everything's under a microscope.
And speaking of politics and crypto mixing, prediction markets are getting a social media twist.
Right. Trump Media and technology group, the Truth Social people, are launching something called Truth Predict. It'll be integrated right into the Truth Social platform.
Okay, so users can bet on real-world events. How does crypto fit in?
It's a partnership with Crypto.com Derivatives North America. And here's the key bit. That entity is registered with the CFTC, the U.S. commodities regulator. Users will trade contracts using Truth Gems, some kind of platform currency, sounds like, which can then be converted into CRO tokens, Crypto.com's coin.
So it's blending social media engagement, political discourse maybe, and regulated crypto derivatives trading all into one platform. Interesting times.
So wrapping things up after that whirlwind tour, what are the big takeaways for you, the listener? We've bounced from macro chills to institutional heat to regulatory weirdness.
Yeah, quite the journey. Okay, first big point. Bitcoin's price action. It's pretty much hostage to the Fed right now. And forget just the rate cut. The real thing to watch is any signal about ending quantitative tightening QT. That's the potential accelerator.
Second, institutional adoption is not some future dream anymore. It's happening. Altcoin ETFs, like for SOL and HBAR, are proof. And the RWA tokenization train is moving fast. Just look at Western Union picking Solana or Securitize going public. That's real momentum.
And third, the Wild West element is still very much alive. You've got serious questions about compliance on offshore bridges, potentially enabling huge amounts of laundering, side by side with crypto's biggest names, navigating tricky political funding questions right in D.C.
So if you remember just two key ideas from today, maybe make it these.
First, the end of QT is the real crypto printing press.
And second, Bitcoin's liquidity is moving off the sidelines, either into the new lending vaults or into the hands of institutional ETF buyers.
Which leads us to a couple of open questions for you to chew on. First, this rush of institutional adoption via RWA like Western Union, Chainlink, is it worth the potential downside of making the market more centralized? What's the trade-off there?
Good one. And also, how long can crypto really keep ignoring these big macro signals, especially that capital drain towards AI and stocks like Nvidia, just to chase the next hot narrative within crypto itself? When does the macro reality bite?
Definitely something to think about. Okay, that's our deep dive for today. Don't forget, we have the best referral link waiting for you in the description.
And please welcome to subscribe to my channel and like this deep dive so that I can continue to make more content. Thanks for tuning in.